Do you know if you follow this method, you are going to get sustainable profits? Yes, of course. This method is called diversification. Come, let's get into the topic. My name is Vivek and you are watching Delta Options. Okay, so first of all, what is portfolio diversification? Portfolio diversification is nothing but investing your capital in different streams. Say if you have some 100 rupees, you will choose some 5 to 10 different stocks and invest in them. This is not very new to us. Our grandfathers and parents also planned in the same way. They used to choose multiple investments like LIC policies, post office schemes, gold schemes or some bank bonds. All they did was to split that savings into multiple funds. This is a risk-free approach and will get good returns as well. The same theory we will apply to our stock markets as well. This will help us to reduce the risk in abnormal times and provide some good returns. Yes, we cannot forget what our master said once about diversification. Never keep all the eggs in a single basket. In this context, if you are investing all the amount in a single share, you have high probability of risk. And if it is not your day and suppose stock falls rapidly, you have to face the consequences for that. Means if the stock collapses, all your capital will go in vain. So when you invest in multiple stocks, your capital will remain with you with very less risk. That is the reason you should have a diversified portfolio. So how this diversified portfolio works? As we discussed earlier, we are splitting our capital investments in different stocks. In share market, you will find many sectors like banking, agriculture, FMCGs, NBFCs. There are a lot of other sectors which will be having their own time cycle. They will be keep on going up and down. Say if you are investing a single stock in a single sector and if the stock sector goes down, then there will be a heavy problem to your capital gain getting lost. If we are taking the recent examples, COVID-19 pandemic in March, the stock market has collapsed nearly 50 to 60%, but it has anyhow recovered very quickly. Still, some of the stocks like aviation or entertainment sectors have not yet recovered because the business haven't started, so the revenue did not boost up back. But see FMCG. FMCG is nothing but fast moving consumer goods which our daily need household products. FMCG is the first sector which had opened up during the lockdown. Because the servicing area is household needs, the stocks came up very high because those are the household essentials. In fact, they did not fall very much when compared to the other stocks. And this is how a diversified portfolio works. Let us consider this as an example. Take two people. One is having a diversified portfolio, other is having the mentality of investing a single stock. What happens? The person A, he is having a diversified portfolio. He has kept his whole amount in 3 or 4 different stocks. But person B, his ideology is to keep all the amount in a single stock. What happened? The COVID-19 pandemic happened. At the time, like in February or March, the person A, who has invested in 5 categories, have small breakdown. Means everything, the stocks went down for everyone. All the 5 stocks went down at a time. And the person B, he invested in a single stock that also went down. And person B invested, say suppose in some entertainment or some aviation sector, it has worstly hit. So that the aviation and movie theaters, anything did not open up still. But person A, he invested in aviation and entertainment as well. But along with these two, he invested in some sectors like FMCG, banking, oil and gas, other things also he invested. What happened? When the lockdown completed, the person A has the advantage. Even the aviation and cinema entertainment things did not come up. The other sectors have come back up. So he has minimized his risk. But person B, he invested in a single stock which is either aviation or entertainment. Those two never came up back because as you know that aviation, the other countries still have not opened the air traffic, and entertainment, cinema theaters or some amusement parks like Wonderla or something did not open until the government have not said yes. See, this is the difference. Like if you are having the ideology of keeping in multiple stocks, Even if this kind of scenario comes, you will have the probability of making the risk very minimal. That is the advantage of our portfolio diversification. I hope this example clears you up. Do you want to know how do I master my portfolio? Let me tell you. I diversify 60% of my capital into blue chip stocks, which are very high capital stocks, 10% in AAA rated bonds, 10% in high dividend giving public sector stocks, 10% in mid caps, 5% in mutual funds, and 5% in small cap. Don't you think I am beating the market sword? Definitely yes. It's a very good portfolio, and I guess you guys follow it and you will take the stocks by your learnings and you will have a very good returns. If you like this content, please don't forget to subscribe this channel and hit the like button, and stay tuned to this channel for growing your money.